What's up, everyone? Welcome back to another episode, Stock Talk with David. I'm David. In this video, we're going to be talking about Alaska Airlines, but before we get started, I just want to shout out everyone who popped in last night and they actually checked out our weekly Stock Talk update. We'll be doing these every Sunday night before the market opens for the week at about 7:30 p.m. Eastern. So make sure you hop in. You can ask all the questions, stock picks, some financial ratios, just anything that has to do with the markets, interest rates, economics, like anything and everything. They're really, really fun. I had a great time last night with the guys. A lot of good stuff was covered. As we get better with them and the more that we do, there'll be less technical difficulties. So again, thanks for being patient to those guys. But let's go ahead and jump into Alaska Airlines. This company we have been following for quite some time, I think since November. It's now February, almost the end of February. And so some good times with it. We've learned a lot over the past few months holding it, which is awesome, right? So Alaska Airlines, they operate typically, you can see this little map here, out of the West Coast areas, so California, Nevada, and Arizona, right? So that's really cool. They operate all over just the West, so tons of cities I didn't mention. But anyway, getting into it, this came out on February 16th, so I think last week. Alaska Airlines is launching the first ever subscription service in the US. So imagine now that you're getting rid of having to pay $120, $200, for an airline ticket, and now you can pay $49 a month and you can get up to 24 trips. Like, that is an insane value, right? That is really cool. And so congrats to them for doing that. I hope it works out, obviously for our sake, but I think it will definitely revolutionize the airline industry. I think the airline industry is ready for it. We think about air travel. Air travel is going up quickly. We think about how expensive it is to fly, all these things. I think if they can really focus on doing a better job of predicting their revenue stream, because air travel can be seasonal. It can have ups and downs, but if they have a solid subscription base, they can count on this $50 per month coming in. They can help to really stabilize some of those revenues. So that's exciting. So you see here, 24 trips. You can do $49 a month. And then they also have a premium version. I guess maybe it might be a better value. $199 a month. And you can do 6, 12, or 24 flights. But then you get some more conveniences, right? Same day booking up to 2 hours and as early as 90 days in advance. So if you're doing a lot of flying, maybe that's the one for you. I don't know. But let's look at the financials for them. Quickly, I want to check out just a couple of things, right? I want to go back, 4 years or so, maybe 5 years, see what's going on with the company. And this is what we're looking at. We're looking at total revenue growth over the year. So, we can see that it's pretty bumpy. It's a cyclical business, right? Airline, we all know that it goes with the business cycles, but they did a really great job recovering in 2021 at 73% revenue growth. That was awesome. 44%, estimated for the end of 2022. That'll be fun to see. Hopefully it works out. But we'll still notice that this revenue number is much lower than what it was in December 31st, of 2017, right? So year ending of 2017, it's still lower. And so that'll actually drive them going to the next thing, a lower profit margin, because they haven't had time to reach the economy of scale, right? Because the more business that you can do, the more you can lower your cost. I think that's just a simple economic business thing, right? EBITDA, and as a result, their EBITDA goes down. Same thing, net income, right? So we can count on that, but we can kind of start to see that the trend looks like it's going to do better. 37.1% to 7.7, projected to be at 4 and almost a half, right? So just little things like that. That's what I want to look at. I want to get the main picture of what's going on. We can see that they have total enterprise value, a little bit bigger than the market cap, so you're just counting some of the debt and stuff. And then book value, total capital. So yeah, I think they're pretty comparable to any other airline industry. And now let's look at some of the ratios. So again, return on equity is one of the ones that I like the most. Again, this is just a broad measure. We're not super going in depth or double checking the ratios, just get a good idea of what's happening. I think, with a strong confidence level, we can get an idea, right? So we'll look at return on equity, 12 months at 14.1. So they're coming back a little bit. They're doing a better job of, potentially returning some value to shareholders, whatever that looks like for the specific company. Gross margin, 41, 33, 25, 26. Now this could have to do with some of the expenditures, some of the expansion projects they've been working on. Maybe that drives gross margin down a little bit. Maybe not. If they're doing more travel or less travel, right? SG&A, so not much of that. And then we'll look at EBITDA. So EBITDA is actually coming back, which is good. And getting into the positive number, that's a good thing to see. I'm going to look quickly at the liquidity. So this will be the short-term ratio. Let's see. I'm going to highlight this so you guys can see what I'm looking at. Make it a little bit easier. So we'll look at the current ratio and the quick ratio. So they're at 1. They're solving out, not a huge risk. Just looking at that. Total debt to equity. Looks like they're bringing it back. They did a good job bringing back the debt level from 2020, which is good to see. Now they're at 107. Let's see, net debt to EBITDA. The total debt number makes sense of why this would be higher, because if they're bringing in less earnings, the total debt number has to be higher, right? But then we look at net debt, and it just assumes to me that they did well with the cash position. They factored out some of that debt, so I really like that. Total revenue, 73.2. That's great growth, right? And I'm going to chart it in a moment. I'll show you guys, what I mean by that. Let's see. And other than that, I don't think anything else too specific that we want to look at. Now we can get into some of the estimates. I think this is where all the fun is looking at the estimates. Okay. So here we go, 2019, 6.4, lost a lot of money in 2020, lost money but not as much in 2021. And now they're projected to really turn the ship around in 2022, and that'll be amazing. Hopefully they'll beat this revenue number. I think 2017 was the number to beat in revenue. Let's see if I'm right. Nope, so 2019, this is the number to beat in revenue. Okay, so it looks like they'll beat it, hopefully. If they do, it'll be just slim. Gross margin, as we talked about, it's coming back. Free cash flow, I'm excited about this one. I'm not going to pull it up, but in the earnings call, you guys can check it out. They're all over, they're published. Management was saying that by March, they will be cash flow positive. So when they report earnings again on April 21st, I would really expect them to talk about being cash flow positive. And in this environment, that means a ton right now, because we know what's happening in the macro picture. Rates are going up, therefore money is more expensive. And they have to borrow money to keep operating. It's going to cost them more money just to borrow the money, right? It gets into this crazy debt spiral. But if they're free cash flow, they have money that's coming in and they're able to hold on to that money. Man, they can do a lot with it, right? They can really pay down the debt. They can do share buybacks. They can issue a dividend. They could work with capital expenditures, all types of things they can do just by having the free cash flow. So I think it gives it kind of that value play at the moment, right? That idea of a value play, at least. Let me know what you guys think about that. And then we'll check out, this is going to be in the quarterly data. We'll just see some growth happening. And we always want to compare it. We don't just want to look at the forward predictions. We want to see how they're going to do compared to the past. And it really ties together the picture. Lots of losses in 2021. Sorry, in 2020. 2021 did good. So it looks like, if we look here at Q3 21 in Q3 22. Yeah, that's pretty significant. That's a nice little pop, maybe 35, 45%. Quick math in the head, but I think that'll work, right? And nothing else that I really want to focus on there. Again, if you're in the Discord, you would have gotten a ton of this information, been going over it in the past. This is just a quick little overview of the company itself. Last thing I want to do is I want to check out the charts. I want to see how this company does with its revenues. compared to the share pricing. So we'll look at that. And let's see. Okay. So we can see that this company really, the revenues maybe don't quite matter as much to the company. We can see that, it had high revenues, but a lower stock price. So maybe the revenues don't matter as much, right? Maybe it's something like an EPS. Maybe it's a net income number. Okay. Now, just forget that the revenue bars are even there. Just looking at the stock price, we're trading at about 58. I'm trying to beat that 60 number, get a good close above that. And this next peak is 71. And then after that would be, 90, right? So I think there's a lot of room for this to grow. In terms of all the airlines, I think it gives you the biggest margin of safety. And they just have, they're a little bit smaller. They don't have all this debt that they have to deal with. They're coming back off of that, which is great to see. So I'm actually going to close out the revenue tab, and we're just going to look at the EPS because now I'm curious. See. Yeah, so you can see that this company really awards earnings, right? That makes a lot of sense. You kind of have this lag effect right here where earnings were high, but the stock price dove down this COVID stuff. So this is so irrelevant right here. This might have been off of some hype, so I think we're going to get back to that stabilization, which is good to see. And I can also change this to a quarterly. Hope that works. Okay, so a little bit better. You guys can get a good idea now what's happening. So this is just going to be the EPS overlaid to the actual stock performance. This is cool. Look at how high EPS is compared to the other times, right? If we look at it, that's cool. Compared to there, pretty close. Stock price is still below. So it looks like we could get a nice, nice jump off of that eventually, right? So that'll be good to see. All right, guys, so that's it for Alaska Air Group. Thanks a ton for watching. I really appreciate you guys. Be sure to subscribe to the channel, be sure to like and all that stuff, and make sure you set your reminders for weekly Stock Talk updates every Sunday at 7:30 p.m. Eastern. Thanks, guys, and have a great week.